The stock market is officially open for trade, and joining me now is Danielle DiMartino Booth. She is the CEO and Chief Strategist at QI Research. Danielle, welcome.
Thank you for having me this morning.
Of course, so good to see you again. The Fed handed down their latest rate decision yesterday as expected. Rates remained unchanged. What was your takeaway from the meeting and Fed Chair Powell's remarks after?
Well, I think that it was very expected, given the Fed is in the middle of a huge political firestorm, that there was not going to be a rate cut yesterday. I was a little bit surprised at how very bullish Chair Powell sounded on the economy, and I think that sets the stage potentially for there not to be another rate cut until he has finished his term at the end of May. I think the biggest surprise out of yesterday's meeting, though, was the dissent from Christopher Waller, which the media this morning is characterizing as a Hail Mary pass, really his only way to stay in the running to replace Jerome Powell as chair of the Fed.
You mentioned that dissent, Danielle. How significant is that split? I believe there were two dissents.
Well, yes, there were two dissents, but I think we all expected the dissent of Stephen Myron, whose term ends just at the end of this month in just a few days. So it really was Waller that was the surprise. He had made earlier comments that the Fed could have the latitude to wait, but he's also been pretty vocal in saying that he is concerned about the weakness that we've seen in the job market. Of course, we're seeing this morning fresh headlines out of Dow Chemical that they're going to be cutting 4,500 jobs, in addition to some of the larger headlines we've seen this week out of UPS, Amazon, and Home Depot.
All right. And what questions do you still have following that Fed meeting yesterday?
So the questions that I have are the fact that we're seeing real-time gauges of inflation come in. In fact, Chair Powell mentioned the fact that inflation expectations had come in appreciably, and therefore I'm wondering why Fed officials decided to put inflation back on the front burner as the primary concern if the market is telling us that it is indeed going in the opposite direction, that disinflation is the greater potential risk. Why they switched away from focusing on the labor mandate.
All right, and the S&P 500 hit 7,000 for the first time yesterday. What is your outlook for markets over the next several weeks and months, Danielle?
So I think that there's going to be a lot of churn going on this year in the markets. I expect a lot of volatility to occur. We're seeing weakness right now in the leveraged loan market. We're seeing weakness in the online kind of private credit traded stocks, and that's telling us that there's another potential credit event brewing, bringing us back to what's going to be, I think, higher volatility in credit, which is going to bleed into the stock market.
All right, and any other market trends you're following right now, perhaps something that you feel is a little bit under the radar that we might be hearing about later this year?
So I think we should be paying attention to days. You're there at the New York Stock Exchange. I think we should be paying attention to days that the Dow Jones Industrials outperforms the Nasdaq, the QQQs. That in 1999 and in 2000, those types of signals were suggesting that employees were rotating into a more defensive posture and getting out of the higher beta, higher risk technology stocks. So that's something that we've definitely been watching because we've been seeing a greater recurrence of the Dow outperforming the Nasdaq.
And given current market volatility and headwinds, how would you advise investors right now, or what advice would you have for them?
I think it really depends on your risk appetite, which sounds kind of like a cop-out, but truly, if you're concerned with record high valuations, no matter what metric you use, if you're concerned about that, then you should be hedged. And if you're a very young investor and you're going to be in this market for decades to come, then potentially you just put your seatbelt on and ride the volatility waves and stay in it.
All right, thank you, Danielle DiMartino Booth, CEO and Chief Strategist at QI Research.
Thank you for having me.